In July of this year, I received my first set of dividend payments from some stocks that I own. I was so surprised to learn that companies would give me money just for owning their stock. In this video, I will discuss dividend investing and how I use it as an additional income stream to retire early. So stick to the end of the video to see the income that I received in September 2020 from my dividend portfolio.
It's not a game, it's a rich thing.
You may notice that my hand is in a sling this week. I suffered a shoulder injury last week, but I'm okay. To avoid a lot of retakes and general movement of my hand, a lot of this video would be read as opposed to me speaking to you freely. Now let's get into dividend investing. When companies have free cash flow left over after investing in growth like new products and services, some of them distribute the cash among shareholders of a stock in the form of dividends. This is free money that you get just for owning the stock. This may be paid monthly, quarterly, or annually, and companies usually announce the date of the next dividend payouts as well as the respective amounts in their quarterly earnings call. Dividends are paid per share. So let's say you have 20 shares of a stock, say XYZ, that pays a dividend of 25 cents per share. Your total dividend payout for that stock would be 20 shares times 25 cents, which would be $5. Dividends are also paid out on fractional shares. During the earnings call, companies also announce the ex-dividend date. This is the date that you must purchase shares of a stock by in order to receive the dividends on the shares that you earn for that stock. You will receive the dividends for any shares that you purchase on or after the ex-dividend date in a subsequent dividend pay period. Dividend yield is a calculation, and it is the annualized dividend payout divided by the cost of one share of stock. Let's calculate the dividend yield for that company XYZ we used in the example before. Suppose XYZ is trading today at a price of $100 per share. Let's say it pays that 25% quarterly dividend. This amounts to an annualized dividend of $1 or 25 cents times 4. Now to calculate the dividend yield, we simply divide $1 by $100, which is the price of the stock, and we will get 0.01 or 1%. In this case, 1% is your dividend yield. The way I think about dividend yield is the amount of shares that I would get if I purchase 100 shares of that stock. So in this case, where I have a dividend yield of 1%, this means that I will receive an equivalent of 1 share of stock for every 100 shares that I own in dividend payments. Because the price of the stock fluctuates daily, the dividend yield on a given date can increase or decrease. So let's talk about taxes. Dividends are taxed, but the rates that are applied depends on whether they are qualified dividends or non-qualified dividends. Qualified dividends are usually paid out by U.S. companies, and they are taxed at the long-term capital gain rate of 0 to 20% depending on your tax bracket. Non-qualified dividends, however, are dividends that are taxed at regular income. Dividends that are paid from REITs are examples of non-qualified dividends. For dividends received from stocks that are traded in a Roth IRA account, no taxes will be applied. For this reason, I trade my REIT stocks which pay me non-qualified dividends in my Roth IRA. I made a video about REITs and the dividends that I received from my REITs portfolio in September of 2020. If you want to take a look at it, see the description below. One thing to note is that dividend payouts are not guaranteed. They can be stopped at any time. For example, a few companies reduced, stopped, or suspended their dividend payments this year because of the economy. Personally, I've seen cuts from stocks like Boeing and Occidental. Now let's take a look at my dividend portfolio. This does not include any ETFs or REITs. These also do not include my dividends that are held within my Roth IRA account. I will go over that in a later video. Just a reminder, I am not a financial advisor. Please do your own research before investing in any stocks that I discuss here today. Let's take a look at my current dividend portfolio on the day of recording. I have 37 stocks in this portfolio. I have stuff like Apple, BP, GlaxoSmithKline, IBM, Coca-Cola, and so forth. The current value of this stock is $28,168.55. Notice that my total profit or my total gain in value at this time is $4,266.34. This was a total percent increase of 17.85%. Today alone, I received a total profit of $692.06. When investing in stocks, I try to pay attention to my stock sector allocation. There are 11 sectors. It helps me diversify my portfolio so that when one sector doesn't perform well during a certain time, another sector will. Even though it seems that I may be oversubscribed in some sectors here and undersubscribed in others, when I look at my entire portfolio, it's a little bit more balanced. This is just one account of my entire retirement portfolio. Now let's go over the dividends I received in September 2020 from my main dividend account. In this account, I received payments from 16 companies. The first company is Union Pacific, where I received a dividend payout of $1, and when reinvested, it was 0.05 shares at $200.78 per share. Union Pacific is an example of an industrial sector stock. Next up is PepsiCo. PepsiCo is an example of a consumer staples stock. I received a dividend payout of $2.06. When reinvested, this amounted to 0.015 shares at $137.32 per share. Next, we have an energy stock called BP. The amount of dividends that I received from BP was $15.75. When reinvested, I received 0.85 shares at $18.24 per share. Bank of America is an example of a financial stock. I received a dividend payout of 21 cents. When reinvested, this amounted to 0.009 shares at $23.92 per share. Next up is Newmont Corp. Newmont Corp is an example of a material stock. I received a dividend payout of $2.51. When reinvested, this amounted to 0.04 shares at $63.40 per share. Lind is an example of another material stock. I received 98 cents, and when reinvested, this was 0.004 shares at $236.87 per share. You may be familiar with the next one, 3M Company. 3M Company is an example of an industrial stock. I received $7.36 in dividend payouts, and when reinvested, it was 0.045 shares at $164.95 per share. Next up is Sherwin-Williams, which is another example of a material stock. I received a dividend payout of $1.34. When reinvested, this amounted to only 0.002 shares at $692.50 per share. Norfolk Southern is an example of an industrial stock. I received 96 cents in dividends, and reinvested amounted to 0.005 shares at $207.73. Microsoft is a tech stock. I received $5.11. When reinvested, it was 0.025 shares at $206.79. Another tech stock that I received payments for was IBM. IBM gave me a payout of $16.53. When reinvested, this was 0.136 shares at $121.68. ExxonMobil is an energy stock. The dividends that I received was $12.96. I actually sold this stock because it left the S&P 500 and I expected lots of sell-off, so I just wanted to get profits from that I earned. Another energy stock that I received the dividends from was Chevron. I received $26.13. When reinvested, this was 0.33 shares at $79.11. Southern Company is an example of a utility stock. I received a dividend payout of $6.47. When reinvested, I received 0.122 shares at $63.16. Johnson & Johnson is an example of a healthcare stock. I received $1.04 on dividends. When reinvested, this amounted to 0.007 shares at $152.45. Last stock that I received dividend payouts for was American Waterworks. This is an example of a utility stock. I received 57 cents in dividends, and when reinvested was 0.004 at $139.72. In total, I received a payment of $100.98 in dividends from this account for September. If you own individual stocks of companies, be sure to check your brokerage account because you may have money just sitting down in your account that is uninvested. You can reinvest those dividends back into the company themselves, or you can purchase other shares of stocks with that money. In retirement, instead of reinvesting, I plan to withdraw these dividends as income to pay for my regular expenses. I really hope that you enjoyed this video. I love dividend investing and use it as an additional stream of income to generate that wealth that I need to retire early. Thank you for watching, and please remember to like, subscribe, and comment if you enjoyed this video. See you next time. Bye.